Hey my friend, welcome to this Day Trading for Beginners video part 2. I'll put a link to part 1 down in the description below so you can check that out later, but watch this one first and then go watch that one. So the first one we talked about lunchtime and how it is just a natural part of the day, part of the rhythm of the day, that a lot of big traders will go to lunch during lunchtime. Imagine that. And they will put their apprentices or their assistants, whatever, in charge of just making sure they do no harm during lunch. And we can kind of see that here. This is the normal meta pattern. So again, these are California times down here since I live in Los Angeles. And this is basically the time that we're looking for. So 9 o'clock California time is noon Eastern time. And as you can see, during lunchtime, market just kind of goes sideways. And we are looking for somewhere between 10:30 and 11 here, California time, for the market to break out. And bada bing, bada boom, it does it. Beautiful. Okay. And that's what you're going to see most days. Now, what I want to show you in part 2 is a step beyond that. So even though this is for beginners, hey, I like to give beginners some extra little tips because we want to move you from beginner to intermediate. So that's my attempt to do today. So here we go. Now, I brought up a chart of the Nasdaq 100 futures. And the reason I did that is because where I learned this was at the Chicago Mercantile Exchange back in the day. The pits were all open back then, and most of the pits are closed today. But anyway, I hired a mentor out there, gave him 5 figures, moved out to Chicago for a while, rented an apartment, and it was through him that I learned this. So if you look, what we've got here is the same time of day. Again, 9 o'clock California time is about noon New York. All right, 8 o'clock obviously in Chicago. But basically this works with New York time. That's, by the way, some people asked me the question on the last video about the lunchtime. How do you determine lunchtime? So I'm using New York here because I live in the US and I'm trading US markets, but wherever the market is active, in other words, if you trade in Europe and you're trading a market or a company or a futures contract, whatever that is, based in Europe or any other country, then you want to use that lunchtime, the lunchtime of that exchange, essentially. So clarify that real quick. All right, now look at this. So here is what this is our normal window of time. We're looking for the market to go sideways. And what does it do? It doesn't, right? And this is a little bit of an unusual situation that provides a really good money-making opportunity. Remember, in trading, it's often the unusual things that can make you the most money. It's the unusual things we want to look for. And so here at about 9:30 California time, 12:30 New York time, right smack dab in the middle of lunchtime when everybody is supposed to be away having their 3 martini lunches, they didn't. The big money came back in and shorted the market during lunchtime when people aren't watching, essentially, because most people know the meta pattern that I revealed in part 1 of this video series. So that's the thing. Once everybody starts to know something, then exceptions start to pop up. And let me tell you, it is intentional. This is not a mistake. So what often will happen, well, what happened in Chicago and how I learned this, as I said, my mentor and I were down there, and I said, well, let's go to lunch. I'm hungry. And he's like, wait. And we watched the big guys leave because they all wear, their different colored jackets and their patches and everything. So you know who's who and who they represent, if they represent a big firm, whatever. So we'd watch the guys actually leave the floor. All right. And then I'd say, well, let's go. And he's like, nope, not going. And sure enough, they came back. They actually left and came back. Why? Because they knew people were watching them and they wanted to take a trade when people weren't watching them. They wanted to break the pattern They wanted to be able to trade with impunity without any resistance. In other words, they wanted to move the market in one direction without a lot of other people coming in and taking the other side of their trades, so that the market could move pretty freely. And it does. So, bam, I mean, look at the difference in the price. Pretty sweet move. And then it actually went down the rest of the day. So that was really the key pivot point of the day that determined the direction for the whole afternoon. But it didn't happen in the afternoon. Technically, it happened during lunchtime, before the typical time that we would look for a break. In fact, if you look at this, if you would have taken the normal lunchtime trade, then we would be getting in somewhere around here, usually around this time here. And if you got in during that time, well, the market just went sideways. I mean, that looks like lunchtime, and it's not. And it's not. And even after that, yeah, there's a little bit of move down. Then we got our breakout here finally. But this was the tricky part. This is where they came in and intentionally took a trade right smack dab in the middle of lunch to break the pattern. And yep, that's intentional. So how do you know when they're going to do that? Well, there's no way to know except to watch. So I do see this pattern happening maybe, well, once a week for sure. It's not most of the time, but once a week, I would say pretty much every week I'll see it once, sometimes twice a week. But boy, they're good trades when they set up. Man, because again, not a lot of people are watching, and so again, the point of that is that the market can move freely in that direction, and therefore it moves pretty fast, and it's pretty unidirectional. And so if you look at that, for example, during this period of time, there's no retraces from here to here. It's just boom, straight down for an hour and a half, straight down. So you really don't have to worry about getting stopped out. We like these nice clean moves where the market isn't going, boom like this, and then comes back up, and comes back up like this, and then goes up like this, where you could get stopped out and then go down. None of that choppiness. None of that choppiness. That's what's beautiful about these trades. They don't have any resistance against them, and therefore they're just very unidirectional moves, and they're easy to stay in and make some pretty sweet cash. So that is the trade. Now, how to time these, how to time everything in the market's very important because, well, there's only two axes on a chart. So you've got your right axis here, the y-axis, and that's price. Everybody talks about price. But then you got time down here. So I've talked a little bit about time in these two videos, but there's a lot more to timing the market, obviously, than just lunchtime. So I do have an indicator I use that is very accurate in nailing cycle highs and cycle lows, meaning times to get in, times to get out. And really, isn't that what all of trading is? When do I get in? When, a time question. And when do I get out? Another time question. So that's what my timing indicator does. Since you're watching me on YouTube, I'm happy to share that with my YouTube friends. No charge. I actually do sell it, but I'll share it with you for free and give you a tutorial on how to trade it. So just send me an email, barry@topdogtrading.com, and we'll get you information about that. And then finally, hey, if you like this video, please leave a comment below. Let me know. Encourage me to create more free tutorials. If you have a request of something you'd like me to cover in the future, I'd be happy to do that. Type your request down below as well. I'm always looking for new topics to add to my list for future videos. Go ahead and click the thumbs up icon. Any comments that you want, participate in the discussion. Oh, and if you would share the video, that's really the best thing you can do. Share good things with good people. So if you thought the video was good, hey, share it with good people. And last thing, I'm also giving away one of my free courses. And this course is not just theories or ideas. I'm actually giving you a really great and complete trade strategy. It's one of my favorite trade strategies. It's called the rubber band trade. Again, I'll give that to you absolutely free. And I take this trade, I just took it today. In fact, I take it pretty much every day. It's a very, very, very high win-loss ratio trade. That's why I love it. So if you like that trade, that strategy, just click the link in the upper right-hand corner of this video, and that'll get you information on how to access that trade and that little mini course absolutely free.